Currencies. Okay, so for those of you that do not know, okay, so this is very basic for some of you. I apologize, but I have to assume here, like everybody here in this session, I'm coming into it like if you knew basically nothing about currency trading. Okay, so if you've heard this before, if you're brand new, just bear with me. Maybe you'll hear something on this session that's new. Maybe you won't, but I got to treat it as if everybody is brand new because I can't remember who was in any previous conversation. So when it comes to currency trading, it's basically one currency versus the other. And the simplest way that you can learn currency trading, okay, think about it like a seesaw. Okay, so if you were in school back in the day, there's a seesaw, right? So this would be one currency and this would be another currency. Okay, whichever currency is stronger at the time, okay, so the heavier kid wins. If the heavier kid is on the left, it makes the price go up. Okay, so if the heavier currency is on the left, okay, that means that price is going to go up. Vice versa, we're on a seesaw. Okay, and there's a currency here, and there's a currency here. And this is the heavier currency, then price is going to go down. That, in a nutshell, is why the currencies move up or down at a particular time frame. So it's always one currency attached to another currency. So in currency trading, it's always two currencies, one to the left, one to the right. For example, you could have the Australian dollar with the Japanese yen. So again, you've got two currencies. We're going to look at a couple of examples. Okay. So when it comes to currency trading, this is not oil, this is not gold, this is currencies. Two currencies will always be together. Okay. In the Forex side. Okay. Whichever one is stronger, that's the direction that price for the short term or long term is going to move. That, in a nutshell, is a very, very basic of what I'm about to show you. So that I understand that everyone here, we've got about 25 people logged in. If you understand this concept, drop the number 2 in the chat. If you understand this concept, that there's two currencies side by side, the stronger one will lead the direction of the currency. Drop the number 2 in the chat. Hey, Chris, what's going on, man? Hope school's going well. Drop the number 2 in the chat. All right. So that, in essence, is currency trading 101. Okay. Now, I'm not going to get into what is Forex. You know, Forex is obviously the exchange of currency, right? So if you go and you travel somewhere and you change your money, that's what currency trading is, right? Money has a different price point, right? The dollar is worth something, right? The Mexican peso is worth something, right? The Indian rupee is worth something. The Japanese yen is worth something. So these are all global exchange rates. So what you see in the market is what you would pay to exchange that dollar for that dollar, depending on if you had, in this case, the odd JPY, right? So if you were, let me get back to my whiteboard. If you were if you were in Australia and you took a plane and you landed over at the yen and you needed to exchange currency, you are basically going to go through what Forex is. You're going to go through a currency exchange. And if you own the Australian dollar, but when you get here, you need to switch it for the Japanese yen, you are going to participate in Forex. This is why in banks you see currency exchange booths. That's all this is. And if you were at the yen and you travel to Australia, when you get there, if you exchange the dollar, you are going to pay what the market is going to offer at that particular time. So if I go to this chart right now, and the example that I just gave you is right here in front of you, okay? The Australian dollar with the Japanese yen. So if right now you own Australian dollar and you fly over to Japan to switch for the yen, the current currency exchange rate is 98.55. You can see the price over here on the right. Okay, so think of this as currency exchange rates, for just a lack of better words. That's what you're participating in. This is why the Forex market is a $7 trillion market. It's not just one commodity, okay? It is exchanged all over the world, okay, by millions and millions of people, okay? So that, in a nutshell, is an overview of currency trading, and this is why it is so dynamic, because there are 7 different currencies that you can trade all paired together. Again, nothing to do with the indices, nothing to do with silver, nothing to do with gold, strictly currencies. I'm going to walk through those currencies here right now. So as we go through the list, let's point out the currencies. We have the Australian dollar. We have the Canadian dollar, so that's 2. We have the chef, okay, that's 3. We have the yen, that's 4. We have the New Zealand kiwi, right? That's 5. We have the US dollar, that's 6. We have the euro. Actually, we have more than 7. We have the euro. Well, I forgot where I was at. Is that 7? 7. We have the pound. That's 8. And did I say the chef already? Yeah, I said the chef. Okay, so those are the 8 major currencies. And you can see here as you go through the list, they're all paired up with each other. Okay, now we don't include the Mexican peso in that. Just the main 8 currencies are the ones that I just gave you. That's the ones we're going to focus on. Okay, so you got 8 pairs all connected, and they don't all flip over. Only some flip over. So what you're going to want to find out, and let's go to this example first over here, in the one that we had, is the JPY. Let's go to my pendulum, right? Right now, okay, based on the description that I just gave you, right now, based on this 4-hour move right here, which, and you can go to the comments for this, which of the currencies is the stronger currency right now between the Aussie dollar and the Japanese yen? Drop that in the comments. Which is the stronger currency right now? Very cool. The Australian dollar. Okay, why? Because the Australian dollar is to the left. And if you remember my pendulum, let's grab a horse, and let's grab a monkey. Okay, the horse is the Australian dollar, and the monkey is the Japanese yen. The horse is going to weigh more than this monkey right now. So that is why price is going up. So when the pair on the left is stronger, price is going to go up. Okay, now when price was doing this, it was a complete opposite. Okay, the huge gorilla was much stronger and bigger than the little horse, the pony. So, and that was the case, the Japanese yen was falling here only because at that particular moment in time, over the course of all these 4-hour candles, the overall relative strength of the yen had become much stronger to the Australian dollar. Okay. And by the way, for anyone that might be curious, okay, there were no animals hurt in the making of this example. Okay, so don't call PETA. No animals were hurt. So whichever one is the stronger one, is going to go in that direction. Now, I want you to focus in right here. Okay, I want you to focus in on this little white box. Okay, because there are certain tools that you can use, okay, to kind of get an idea what is going on. Now, what I'm about to show you, in case you've never seen it, this is not 100% concrete because nothing is. But what I will tell you is that the higher time frames produce very good results. Not the 5, not the 15. You're going 4 hours and daily produce really will begin to show you a possibility. Obviously, it's just something to look at and then base it off support, resistance, and things that we do to that nature. But it's something that you would want to pay attention to, okay? And that's called either currency heat maps or currency relative strength indicators. I'm going to show you a couple of them, okay, that are widely used. Okay, so you can now see the currency strength meter, right? Put the number 1 in the chat. You can see the currency strength meter on this one, purple arm. Okay, cool. Okay, it might be the system's glitching here. So this one I was showing you too. There's the currency strength meter. So we just gave you the example. You can change the time frame right here. So here's the 4 hour. I was showing you how, again, odd JPY, right? So you can come into this and you can say, oh, let me see which one is much stronger, okay, to the actual currency. Kind of gives you a little heads up. Right? It kind of gives you a little heads up. And then before I was showing you the heat map, you can do the exact same thing. This gives you all the time frames. So this one is kind of nice because you can kind of see a screenshot in one heat map. So I can say, okay, I'm going to trade on the 4 hour. Here is the Australian dollar. Here's the JPY, solid green, solid red. I know Aussie is much stronger. And you can kind of see here how we went from a 1 hour green JPY to a red 4 hour. So this was a slight pullback. And then we continued very weak green, you know you're buying the Aussie JPY. And again, you're not using this on its own. You're using this as a tool to look at the strength of the currency at that particular time. In my opinion, you really do not look at anything below the 1 hour. You start looking at the 1 hour and you're looking for the setup that's going to happen on the 4 hour, okay? The 4 hour and daily, okay? So this kind of gives you a little bit of insight as to your actual currency. This is why I like the heat map combined. Now, if you want to just do one time frame, you can, but this gives you everything, okay? Where the currency strength, again, you can change right here, and you can just change it, and you can see how it toggles over right now. Obviously, today, the Australian dollar has been much stronger than the Japanese yen. So look for the biggest winner at the beginning of your trading day. Start with the 1 hour, 4 hour, and find which currency. And this almost, I'm not going to say guarantees, but this almost means if you go in that direction, you should, on the higher time frame, you should be able to scalp positive pips in that direction. Okay? Positive pips. So it's just a tool. It's just a tool. It's not going to take away. It's not going to take away from looking at your chart, right? But it's a tool because if we know or we have a little bit of a heads up as to, this currency, right? Let's take a look at. I want you to focus in on the Aussie dollar. Okay, the top one here. Let's look at in the last hour. Look where the Aussie dollar was. It was down here. See how it puts it in order? If the Aussie dollar on the 1 hour was good, what's happened on the 4 hour, right? So it started gaining strength on the 1 hour. But if we go back to the 30-minute chart, okay, still green, right? And of course, we can map this later on, but we can see here that the Aussie dollar was started green 15-minute, 1 hour. It looked like it had a pullback on the 1 hour, but it's been green the entire time. So you're matching up, hopefully, the best green with the best red or a combination, and it gives you a little bit of an insight as to the possible currency that maybe that day you want to trade that currency, right? And you want to look at it. So this is just another tool that you can definitely use, okay, when you're looking at currencies. Okay, and you can see how this is real time because you can see how it's switching. So now you know if you're in a trade, and you come back and look at this in 30 to 40 minutes or an hour, and that green is still solid green or getting bigger, why would you exit the trade? The currency is staying strong, right? Now you're going to see the price action, but you're going to see how it's continuing to go strong, okay? So right now we're on this 15-minute chart. Let's take a look at Euro JPY. Based on this chart, what should be happening with Euro JPY? Okay, based on this chart, what should be happening with Euro JPY? I'll give you this link. Okay, so Euro JPY, buy Euro JPY. Okay, so let's go. And now let's go back over to, let me share this tab. Yep, I switched over. Okay. Which did I say? Euro JPY. And I did it on a 5 or 15-minute. Again, we're starting to look at the 5-minute, right? So you can drop down one time frame and you begin to see, there it is, right? There it is. There's you can see here. Now, obviously the optimal position was down here. So again, you can use that strength meter to start looking at the smaller time frames, and then you can say, okay, it just got green on the 5-minute, it just got green on the 3-minute, right? Maybe I'm waiting for price to, come back to support on a 3-minute, and then I'm looking now, there's the 5-minute, it's taking off. It seems like this is a bullish engulfing candle setting up. It hasn't closed yet, right? And then you start looking at, okay, there's liquidity that was made up here this morning. Could they be heading up there? Because look at, we've had 2 floors there. It's just another way to guide you, because if you go all the way to the 1 hour, for example, you can see we're climbing. If you go to the 4 hour, you can see that we already had a dip down. We took out liquidity, and then we're making our way up. We came all the way down from here, right? And then you go to the 8 hour, right? You definitely want to stay with the trend. You go to the daily. So the best thing to do in this particular example is you want to stay with the trend. You're looking for the retracement down to keep buying this trend here, okay? Which the daily candle has confirmed that it's an uptrend. So once you kind of figure out how you can tap, 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 mix and match, you can really see the value in being able to have a little bit of advantage when doing currencies, okay? Because you can start focusing in on the stronger currencies, and some of these currencies will ride out the whole day and the whole week, okay? Because again, that currency meter, you can see the whole week as well as the week begins to develop. So just a little tool that I wanted to show you as we begin to go a little bit deeper, okay, into currency trading. This is what we plan to do. We plan to look at these weekly levels, okay? And this is where I'm going to kind of close with this for the first session, right? Just kind of give you a heads up. We're going to be looking for places where price loves to come back. So if I come back up here for a minute, I've shown some of you kind of the strategy on some of the personal coaching sessions, but I'll do it again here. Once we see that price has done, for example, while this is dropping down, once I see price, okay, take off to the upside, all I do is grab a box and I leave that box. That's why you'll see my videos will have boxes, right? Because price loves to come back and return to the supply and demand zone, right? So on a weekly, we may only get one chance at this, and then it's gone. And then it could be gone for months. But we're going to start looking for these opportunities to get in here at the ground floor. So you may only get 1 or 2 of these weekly type of trades that may actually activate. But when it goes, it's going to go. And this is why if you can have a broker that's not, just to hear was 1,500 pips, right? As you write it up, right, that's 2,400 pips, right? Did a nice retracement and then just continue going. So, you can catch one of these a month, one swing of this a month. So this thing started on March 20th and maximized at July 8th. So April, May, June, 4 months. If you stay in this thing, yielded thousands of pips, right? At $1, right? That's $3,000 on letting one trade go at $1 over the course of 4 months. That's not bad. If every 4 months, and that's just using $1, you bring in an extra 3K, just letting it ride. I don't know about you, but that's pretty damn good. That's pretty damn good. And again, we're just talking about $1. You can just let one ride. You should have no fear in closing this trade because your risk is so small that you can let this puppy go for freaking ever. And you can say, okay, I'm going to go for 1,000 pips and see if it goes there. And imagine if every couple months you can tag 1,000 here, 1,000 there. Let's just say you make an extra 3,000 a year just on this type of trading. That's it. This is like no stress. Let it run. Just let it go. Let it go. The only reason we close this out is if we close below the white bar. That's it. So this is where if you can understand to bring down your lot size to when you're going to do this type of trading on the weekly and just let her run because these will run, okay? Especially the JPYs, they are trending, right? They are massive trending pairs, right? Massive trending pairs. So when we get a floor, I'm going to be looking for the weekly floor and Fibonacci level because guess what, my friends? This here, look what that look where this initial launch took. Look where this initial launch started. Right when we like it. Right before the 88.6. It didn't close below the 100. We're taking that weekly trade in 2025 and we'll freaking hold this thing from that was in June 2020. So those people that held from June 2020, right? 6,084. 6,084 pips, right? Now, of course, we're not going to be holding something for 3 years, but you get the point. Imagine if you just said, you know what, I just want to get 100 pips out of each one of these. That's going to be so easy on the weekly, like so easy. That could probably happen in a day or two. So the mindset is to change into this. I got to get in the computer. I got to open up. I got to scalp to, hey, letting something go for a couple weeks. Set your target at 100 and be done with it, right? And be done with it. So, or trail it after that, whatever the case may be. That's where you'll have to find what your mental capacity is and your sweet spot is for that, right? So again, I'm not saying I'm going to leave a trade open for 3 years because I would not. But what I'm saying is we find these entries, right? And from this entry here, if we just went to a realistic top here, which was coming back to retest this top, that's 1,129 pips. So that's on $1, that's $1,000 that literally took 2 months, 3 months for it to work, right? So again, looking for long term, you decide when you want to cash out. 100 pips will become our 20 pips on the scalping technique. After 100, you decide what you want to do, right? But my goal is to be able to put you in a situation that within a couple of weeks, you've got 100 low chill type of trading in your main account, in your separate account, and you just run from there. Okay, so anyways, I wanted to show you today nothing more but the currency indexes. You have 2 links you can use. This is a lot of what we're going to be going to, okay, on just the currencies. We're not doing this on the indices. We're not doing this on the other stuff. We're going to do this on the currencies because currencies are much easier. They don't move that much per day. That's why they take longer to get you 1,000 points. We lost 1,000 points yesterday in the indices alone in one day. Currencies won't do that, right? They'll lose maybe 100, 150, 200 max. That's it. And that's on a day like yesterday. Normally, most of these currencies only run about 100 pips a day in both directions, right? So there is less volatility on the currencies for long-term trades, right? All right. If you're excited for this, drop the number 6 in the chat. If you're excited for this, drop the number 6 in the chat. Sometimes we just got to repivot and retwist, right? For some of you, this is going to be, I think, a lifesaver, especially if you're working, right? Especially if you have jobs and you're working or you're doing other stuff. This kind of set it and let it go, forget it, is going to help you, whether it's going to become your main account, a side account, whatever the case may be for you. This is going to become a whole new world for you versus looking at your phone every 20 minutes. You should not be looking at your phone every 20 minutes. There are 2 types of traders. Traders that sit down for an hour and are sitting on the 1, 3, 5 minute chart trying to scalp pips and getting out of there, or those that are looking at the higher time frame, set it and forget it. Unless you get an alert or a ping that it hit your stop loss or your take profit, you should not even be looking at your phone. There are no choices, okay? No, there is a third option. You set an alert and you decide you want to cash out early, okay? Other than that, you should never be looking at your phone. For some of you, I know your phone ruins your life. If I look at your screen time, because you're all day looking at your phone to see what's going to happen. There's only 3 options, right? Break even, win, or lose. That's it. Or really 4, close early. So set it and forget it. This is going to be a set it and forget it mode. We'll look back on December 2025, and you may look back and say, man, I only took 35 trades all year in this long term. But that's it, because there's not going to be a lot of opportunities. But when they are, they're going to run for hundreds and hundreds of pips. You just decide where you want to take your profits, type of thing. Okay, sorry for the glitch. I'll look at the replay this weekend. If it was too choppy, I'll do a quick little segment, but you've got the links. I think you understand what those things are. I'll probably do a quick little Loom video at some point, just showing those links again and how to use it, just as a tutorial, so you can always go back and refer to it, and so you can have it at your disposal. Okay, it's Thursday. I'm out. I'm going to disconnect for a little bit. I'm going to take a nap. I'm not going to lie to you. And then I'm going to go pick up my kid from school, come back and relax. Tomorrow's Friday. For you guys and ladies, I will do a morning session, so you can try to catch some pips on Friday. And that's it for the weekend. All right, that'll be it for the weekend. So next week, we'll look at the gap Sunday. We'll look at Monday. When's the 24th? Tuesday? Yeah, the 24th, Tuesday. Maybe something in the morning. And then after that, we're going to take a few days to kind of unwind and enjoy the holiday. I'm flying out Wednesday, so nothing Wednesday. Thursday, probably nothing either. So we'll see. We'll see. But once I get over there and settled in, I'll definitely do a couple of training, just general trading trainings for you guys while I'm on vacation. Okay? All right. We shall see you soon. Thanks for coming.